Bring in show music, please.
This is Squawk Pod, and I'm CNBC producer Cameron Costa. On today's episode, he once sat as a governor on the Federal Reserve, and now he's got some harsh feedback for his colleagues still at the central bank. It's Kevin Warsh.
They don't seem to have a serious theory of inflation that's theoretical and empirical. It's not obvious that they acknowledge what their role is in prices. Instead, it has something to do with wars and pandemics.
His advice?
Stop talking so much.
And what the polls say about each presidential candidate's footing as we close in on the vote, with pollster Frank Luntz.
The persuadables, and it's a tiny percentage, it's 2% now, they can be moved by Harris, not by Trump.
Should we trust the polls at all? CNBC's Steve Liesman has new data and a fresh take.
If you want to know who's going to win, you got to look at the battleground states. And the trouble is that the state polling has a larger error than the national polling.
Those stories, but first, big news from Boeing's negotiations with its union workers. That's all on today's podcast. It's Thursday, October 24th, and Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue, please.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. We do have some news breaking late last night. Boeing's machinists union voting to reject that latest contract offer. It extends the strike. The stock this morning off by about 2.1%. Phil LeBeau joins us right now. He's got more on that story. Hi, Phil.
Hi, Becky. This was an overwhelming rejection. When you take a look at the final vote here, 64%, basically 2/3 of the machinists who voted, they said no, this is not a good enough contract. 36% did say they would agree to the contract, but that's not good enough at this point. The strike continues after 41 days. Late last night, this is what the president of the Machinists Union had to say about the vote.
This wasn't enough for our members. There is a big gap that we couldn't reach, especially when it's been 16 years since we've had a chance to bargain every area of our contract. And trying to make all that up in one is very hard to do, but our members deserve more. They've spoken loudly, and we're going to go back to the table to try to achieve those things.
So here's a refresher on the contract that was just rejected. 35% raise over 4 years, $7,000 signing bonus. Boeing also committed to putting a $5,000 one-time deposit in every machinist 401k. The annual bonus would be at least 4%. But that's not enough for the machinist. And yesterday, when we sat down with Kelly Ortberg, the CEO of Boeing, we asked him about how important it is to get a deal done. Here's what he had to say.
The vote is important. It's more important in terms of our long-term getting back to building airplanes, delivering good airplanes. And so we've worked really hard to find that overlap where we've got a deal that the employees can feel good about and the company can be successful going forward.
As you take a look at shares of Boeing, remember, this is a costly strike. It's estimated to be costing Boeing at least $1 billion per month. It's now 41 days long. There is a potential capital raise of $10 to $15 billion that is set up. It's ready to go. Boeing has essentially lined everything up, but they haven't pulled the trigger yet. Why? They wanted to get this contract locked in with the machinists. We'll see if that changes their calculation at all, since this strike is clearly going to go a bit longer here. Bottom line is this, guys. This contract they're going to have to go back to the table, negotiate it. My sense is they will probably have to sweeten the deal, likely with the signing bonus. That's one way that you can convince a lot of rank and file members, hey, sign now. You're going to have immediate bonus of X amount. And that may be the way that they ultimately get this done. But clearly, they're going to have to go back to the negotiating table.
If you get a signing bonus that comes in, you raise that, that's a one-time payment versus something like a pension that the machinists are actually looking for. That's much longer-term financial issues for the company to be able to say something like that. Phil, is there any comment from Boeing on this?
Not yet. We reached out to them last night, and we haven't heard back from them. I suspect that we won't hear back from them today, aside perhaps from a very boilerplate type statement saying, look, we're disappointed. We will go back to the negotiating table.
We just got guidance from the company yesterday when they reported their earnings. Does this impact that guidance? I think for the fourth quarter, they were anticipating losing about $4 billion.
It depends on what they ultimately have to come to in terms of an agreement. Look,
and
every
how long
time
this
they
drags
raise
out.
let's talk about the signing bonus. Let's say they throw another $1,000 or $2,000 into a signing bonus for the rank and file members. There are 33,000 of them. You do the math, 33 million for every 1,000 that you kick it up. So let's say they go up to 10%, a $10,000 signing bonus. You know, that's another $100 million,
Right.
essentially. Is that going to have a huge implication on the bottom line for Boeing? Probably not. It might, but probably not. Now, you get into a far different discussion if you start going into things like a longer raise over time, et cetera. But I think near term, I'm not certain that there's going to be much change in terms of Q4.
Is there a point where they would ask mediators to get involved or try and seek help from the White House? I mean, this is a pretty big deal, a very important company to the
acting labor secretary was the mediator of sorts, the go-between between Boeing and the machinists for this latest contract. My sense is that she probably will be involved again. They already have in the past met with a federal mediator. That's obviously an option as well. I think, look, this is not a case where Boeing doesn't want to get a deal done, where they're dragging their feet. They do want to get a deal done. The question becomes, what's the sweet spot? Where's the point where you can convince enough members it's time to get back into the factories in Renton and Everett and start building planes again?
Phil, thank you.
You bet.
Peloton jumping more than 11% in yesterday's session. This after Greenlight Capital's David Einhorn saying that shares of the company he believes are significantly undervalued. Einhorn made the pitch at the Robinhood Investors Conference as he was riding a Peloton bike. Over the summer, Greenlight Capital disclosed a $6.8 million stake in that company. Einhorn's comments coming one day after Peloton announced that it was partnering with Costco to sell its Bike Plus in its warehouse stores and online. The stock was a pandemic darling, as we all know, but down now more than 95% from its high in December 2020. And I know that your bike, Joe, gets a lot of utility.
Oh, it's gone.
All of the clothing.
Yeah, it's gone. We used to. It was great to hang clothes on.
That it hangs on.
But we did sell it. You can sell them.
The used ones. Yep.
But the only problem is if it's in the basement, is getting it
out of the basement. It's very heavy.
Basement.
Yeah.
You cannot believe how heavy.
Oh, I have one too.
So in terms of exercise, that was really good to move a Peloton. You can
burn some calories.
I'm looking at the
get your heart rate going.
No, just the market cap, $2 billion.
$2 billion.
I mean, there was a time, I think, when
we've still got one in our house.
We still have one.
But we were fully. What was
it's a piece of art?
What was
it's a piece of art in our house.
I was going to do the math on what it was worth at the highs, but
I think we still have it. I can't even guarantee that we still have it. I think I still have it.
I'm not even sure we have it plugged in.
What was the high on that stock? Because I was just going to figure out what the market cap was. Because we saw it and didn't go, are you out of your effing mind?
No, I think some of us did say, are you out of your something mind?
So it was 150, so it's at 6 now. So what is that? 6 times 25? 6 times 25, is that it? So 25 times 2, so it was a $50 billion company.
Oh, yeah, no, I think it was. There was a moment in time.
Right now, it's time for a special edition of the CNBC All-America Survey that looks at the presidential election from the national perspective and combines results from the 7 critical battleground states. Our senior economics reporter, Steve Liesman, is here. He's got the details on that. Hi, Steve.
Good morning, Becky. This is a unique look at the election from a national and battleground state perspective. And what the All-America Economic Survey shows is no matter how you slice it, it's a statistical dead heat with economic issues strongly favoring Trump, social issues and concerned about character, keeping Harris toe-to-toe with the former president. Nationally, we show Trump up by 2 points, 48% to 46%, same as our August survey, and both within the 3.1% margin of error. In the 7 combined battleground states, where, by the way, because of the sample being smaller, it's a 4% margin of error, It's 48 to 47, or 1 point closer. Congressional preference, though, control. 48% wanted to be Republican, 44% Democrat. That is unchanged again from August, despite all of the money being spent. Well, the division in the top line data reflects deep splits by race, gender, and education. Let's go through some of those here. College grads are more. Harris is winning by 20 points. Some college or less, Trump is winning by 16 points. Voters of color, Harris is winning by 27 points. Importantly, that's down 10 points from our August survey, but it is 10 points higher in the battleground states. White voters, Trump is plus 14. Women, Harris plus 12, Trump plus 17, and that is a key for Trump. He's winning men by more than Harris is winning women. Okay, both candidates have made strides and some have lost ground with key constituents. Let's go through. So with women, Harris led Trump by 5 in August. Now she's up 12. Men, Trump went from 9 to plus 17. Becky's shaking her head, which really makes me comfortable that she understands everything that's going on. No, I get it, yeah. It's really interesting, right? So voters of color, Harris plus 37 in August, now plus 27. Again, she's at 38 in the battleground states. And then this young thing is really interesting. Harris was plus 10 in August, now Trump is plus 1. Why? He has made important gains with young men throughout the country and in the battleground states. Now, looking at this next thing here in terms of favorability, Harris has lost all her post-convention bounce. She went from plus 3 in the September NBC poll to minus 10 back where she was in our August survey. That's a sign Trump has been landing blows on her image, and maybe perhaps she's been doing it to herself as well. Trump maintains his minus 13 to minus 6. He was minus 13 in August too, so he's improved his favorability. Now, Trump has big leads over Harris among voters who grade the economy and inflation the most important concerns. That's true nationally and in the battlegrounds. But here's one interesting difference to think about here. On the issue of the needs of the middle class, 82% say it's an important issue nationally, but 88% in the battlegrounds. Now look at this. Trump is plus 5 on the issue nationally, but Harris is plus 3 in the battleground states. So she's done apparently a better job in terms of making herself feel like she's more in line with the needs of the middle class in those battleground states. Harris has big leads on abortion in the battleground states and nationally. Trump trounces her on immigration and crime and safety. So amid all the spending and campaigning, there are shifts underneath the surface that are important to watch, wins and losses, but the race remaining pretty much what it was, guys.
Is there a reason to look at national polls when we know it's going to come down to these battleground states?
It depends on what your question is. If you want to know who's going to win, you got to look at the battleground states. And the trouble is that the state polling has a larger error than the national polling.
So if pollsters were really smart, they would do much bigger polls in the battleground states?
It's an interesting question. I don't know if it's bigger. I don't know if there's something about the states that make them particularly hard. It's so interesting that we can use 1,000 people and get really close to the national thing, take those same 1,000 people, put them in Wisconsin, and you're going to have a larger error. It's one of those statistical
Funny you
things.
said Wisconsin. That was the one where someone was up 17 and Election day was 1.
It was 1. Yeah. I think Wisconsin has shown itself to be one of the states that defies accurate polling. Look, I love these polls because however you come to your conclusions about what's going on in America, I get to ask 1,000 people the same question.
Right.
And I get to really learn about what motivates people, what people are thinking, the differences of opinion out there. We all have our little, atmospheres and bubbles that we live in. And this gets you outside if you read the story, read the responses.
I love seeing this stuff, but I also know how wrong polls in general have been over the last 10, 12 years politically, just because it's harder to track down people, to get them to either answer the phone, to get them to respond to something along those lines. And I think we're all trying to figure out how much we put in the polls, especially when they're so closer than the margin of error, which makes it really tough to feel like you can say with any authority.
I'd just like to say we have, I think, 2 of the best pollsters in the country.
No, I know.
What I wanted to say, we have a public opinion strategies on the Republican side. We have Hard Associates on the Democratic side. Yeah. We have been working and looking at errors that have been made and trying to correct them. There's the notion of not getting the responses from the Trump people, but you simply... You can't add people just because you were wrong last time. You've got to find those people. We spent enormous amounts of money moving from landlines to cell. We've used some web stuff in our Latino poll that we did with NBC Network and Telemundo. We used, I think a third of it was web stuff. So everybody's trying. Everybody has an interest in getting this right. And by the way, an interesting thing that I've thought a lot about is this. Every dollar spent in a campaign is designed to prove a poll wrong.
Right.
So
they're paying attention to the polls.
If I show you that Harris is lagging with the Latinos, what is the Harris campaign going to do? They're going to spend tens of millions of dollars.
That's really
proving the poll
interesting.
wrong.
So they're watching the polls for sure.
They're reading that's why we all do it. Now, I mean, my wife said to me, Steve, why are you working till 9 o'clock or 10 o'clock at night on this poll? Why can't we just wait till the election?
Well, that's the thing.
I'm not sure I've got a good answer to that.
If you go,
I'd like to.
If you go back, I mean, if the 2000 election was literally in the hundreds,
right?
How do you possibly poll 300 million people if you get down to a margin of 100? What was it? It was like 1,200 when we were
in Florida.
We were in Florida, but that's what it
came
down to.
If I just real quickly, tomorrow we've got two really good stories. One looking at those voters who are persuadable, a large percentage of which there
are still persuadable right this minute.
Still persuadable people out there. And then we're going to look at the advertising and the marketing in some of these states.
And what I do love in this is showing the direction and the trends on things, because I think that shows you clear momentum one side or the other, and I think that's probably pretty valuable.
It's fascinating. Anyway.
They're begging us to go, but
it's coming up.
This is fascinating, and
thanks, guys.
We'll see you later.
Let's go. Move it or lose it.
Next on Squawk Pod, the Federal Reserve gets a mild scolding from former Fed Governor Kevin Warsh.
In a world this dangerous, an economic policy where fiscal policy is irresponsible, the central bank needs to be very clear about its reaction function, be clear about its goals, and not look like it's lurching. That's what put us in the mess we have.
That fascinating conversation when Squawk Pod comes back. This is Squawk Pod from CNBC. Let's get back to Joe Kernan, Becky Quick, and Andrew Ross Sorkin.
We are just a few weeks away from the Fed's next meeting, and our next guest says that he was puzzled by the central bank's 50 basis point cut because he thinks it contradicts everything they've previously said about their policy. Joining us right now is former Federal Reserve Board Governor Kevin Warsh. He's a distinguished visiting fellow at the Hoover Institution.
So distinguished. It's like hard to say distinguished enough. Yeah. Reeks of distinguishment.
He's wearing a tie.
I just arrived and the sniping has already begun. Becky, why don't you take control over this?
I think
you
they're
shouldn't
being
take
sincere.
things as sarcasm when they're not. You should
distinguished nature.
Very distinguished.
We are very happy to have you here, Kevin.
Just call him chairman.
Why don't you just explain what you mean?
Chairman-elect.
Why don't you explain what you mean by saying this goes against what the Fed had been saying up to this point with their policy?
So they've had different theories, Becky, about causes of inflation, the measures they use, and people in financial markets and media have tried to follow those. They said for a long time, you'll recall a few years ago, they were for flexible average inflation targeting. So inflation, when it was at 1.7, they said we'll get it a little higher and we'll try to balance around 2. They seem to have gotten rid of that idea without replacing it, so they don't have a broad new strategy. Then they said for a long time what really matters is core PCE. That's what we should focus on. But it's now running at around 2.7%, nowhere near their 2% range. About a year ago, they said, well, the best measure of inflation is now what they created a new category, and they said it was core services ex housing. Well, that's in the 4s. Previously, Janet Yellen, and embedded in the Fed model, said what really matters is wages. And so we need wages to run at 3%, which is consistent with inflation running around 2. Wages are running around 4. So all of this isn't to say that all this is to say they don't seem to have a serious theory of inflation that's theoretical and empirical. It's not obvious that they acknowledge what their role is in prices. Instead, it has something to do with wars and pandemics. I think in a world this dangerous, an economic policy where fiscal policy is irresponsible, the central bank needs to be very clear about its reaction function, be clear about its goals, and not look like it's lurching. That's what put us in the mess we have.
I understand your point. I will say I can understand their perspective if they're saying, look, it was inflation. Inflation's been coming down. Now maybe we need to pay attention to our other mandate, which is the jobs market. However, the jobs numbers have been better than anticipated, too, over this time. I can understand moving around and saying there are things that are more important at different points in time. What do you think about the dissent that there was at the last meeting, and do you think there will be more at this meeting?
Yeah, so it's a fair point. So what you're really saying is they've claimed that they're data dependent.
Right.
And when times change, they should change. Well, of course that's right.
Right.
I can't argue with that. The data since early part of the summer has gotten better. The economy's gotten stronger. The broad sense of the data is the economy's in better shape.
Stock market.
Well, the stock market is in better shape. So if that's all true, then maybe they're not data dependent. I do not want to be the person accusing them of politics. That is not the central bank I know. The members of the FOMC that I know, they don't play politics. But when you don't have a theory of the case and you don't follow it, it is easy to get that accusation, and it's harder for people like me to defend them.
So why do you, go.
Did you see Esther George yesterday? I've had a running argument with Steve Liesman about whether the Fed should push back on Congress about funding some of the oversized spending that we saw. Steve says they work at the, whatever the Congress does, they need to enable the Congress. That's what their job is. They work for Congress. Esther George said they definitely should push back. So I guess I'm asking, I don't think politics should influence the Fed, but can the Fed influence the politicians, or should they?
And how complicated is that when they're the ones who are given oversight for the Fed?
Let me try to get into that riddle. When they kept interest rates near zero for a decade and did quantitative easing, where the central bank are buying the bonds of the Treasury Department in crises, and they decided to make that more or less a permanent feature. Mm-hmm. It is the Fed that wandered into politics on a permanent basis. And in a period of free money, what was the clear sign to Congress? You can spend all the money you want, and so they did. You don't have to do much to get a bunch of members of the Congress to want to spend money, and they said, come at it, because it's free and it'll be free forever. Remember secular stagnation and zero rates and zero lower bound. So they encouraged this spending boom. Over the course of the last few years, Congress, at a time of relatively full employment, added $5 trillion in deficits cumulatively, and has put the country in a much more dangerous place. This level of debt is dangerous for our economy, and it's a terrible sign to the world, because we're all talking about economics.
Kevin,
bad economic policy provokes our adversaries to take us on, so that makes the country less prosperous and less peaceful.
Have you seen the calculation that big banks have been almost given this windfall of profits because the Fed paid them to hold on to reserves rather than giving it out in loans, and as a result, they've gotten paid more than normal businesses would have been paid, and it just padded their profits. I saw a number like $1 trillion. Have you looked at that? Is that true?
So I have looked at it. It's shocking to believe that the banks would take advantage of an arbitrage.
And they did.
And they did. I don't blame the banks for taking advantage of the arbitrage. I blame the central bank for allowing the arbitrage to happen.
What was the rationale?
Why did they do it? Yeah, the rationale for that and the rationale for keeping rates at zero. If the Fed was wrong in doing these things and allowed Congress and the banks to take advantage of the situation, why were they doing it?
I think the reason why it happened is, in the old days, think about the Greenspan Fed, we had a Fed funds rate. That was the rate that mattered. It was the rate the central bank communicated, and it was the relevant rate for financial markets. There are a proliferation of rates now that the central bank hits. The interest on excess reserves rate, the Fed funds rate, and a host of others. There's a series of risk-free assets that are now competing with the Treasury. They come from Fannie and Freddie. They come from the home loan banks. They come from government guarantees of all sorts of things. The Fed now has many different rates that they're trying to juggle at the same time, because they've moved from a relatively simple way to manage the central bank and the balance sheet to a very complicated one.
Is that a reflux and after effect of what happened in the Great Recession and the financial crisis and the extraordinary moves that were taken to try and normalize and stabilize things?
I think it comes from two things. It's one, the central bank playing a much more permanent role in the financial markets and wanting to, not just in crisis times where I have some sympathy, but for all seasons and all reasons. And it also comes from the fact that they have a framework that is unanchored, that they are pursuing different objectives that are often at cross purposes. One simple example, They're now seeming to loosen the policy rate to provide more accommodation. At the same time, what are they doing with the balance sheet? They're still in some modest quantitative tightening, which is tightening financial conditions.
Right, it's like having a foot on the brake and the gas at the same time.
Working at cross purposes, and the rest of the world is watching.
So what would you do if you were Federal Reserve Chairman?
You see, I finally got over the shock of not getting this job 6 years ago. You're dragging me back in, Becky.
Oh, we're going to talk about this in a second, too, about whether you really get dragged back in.
I'd go to a simpler framework. But if I step back, what I would do first is stop talking so much. We have 19 people around that table, and they're all coming onto your show and others.
Which we appreciate.
And they're giving you their forecast for rates and their dots and all the rest. And they're all herding around the same numbers. More thinking, less talking, more thinking about answering questions like, what is inflation? And what is our role in it? What's the proper framework for the conduct of monetary policy? Because if you again step back, Becky, I think where we find ourselves is if Washington writ large were trying to design a set of policies that were good for asset holders, made the stock market go up every day, were bad for folks that are living on their W-2 income, that don't own assets, that just have income. You're taking risks with their paychecks every day. So what this administration has done over the course of the last several years, especially the last year, is to goose the stock market. That's what this mix of big irresponsible fiscal policy does.
If you put these changes in place, would the stock market drop as a result?
Transitions are difficult. The way I would say it, Becky, is this. If the focus from the central bank were on the real economy, the financial markets will take care of itself. The real economy is growing strongly. Financial markets will be fine. But if the focus is on financial markets, that doesn't necessarily mean that hardworking people in the real economy will do as well.
I just he's going to be Fed chairman. That's all.
We can get to that in a second. I just want to understand.
And would you keep rates low for Trump?
Well, that's a separate question. Well, why don't you answer that question first?
I'm sorry, I'm having a hard time keeping track of these. Do I go back to Becky?
Don't. You're so quick. Don't. That's like it sounds like a political candidate. What was the question? You said 6 years ago it didn't happen. Is there a chance it could happen, Kevin? I mean, I think there is. If there was a Trump. Another Trump presidency. He's made very positive comments about you in the past, but does he know you? Does he know that you might keep rates too high and be the sort of as bad as Jay Powell in his eyes?
So there is not a vacancy, as far as I can tell, at the Fed until the summer of 2026. That is a very long time, both for the economy and any decision making.
How fast it goes.
Let me ask you two questions. One is, how concerned are you about if former President Trump becomes the president, even though you may be up for the job? There's been a lot of questions about the independence of the Fed, whether he could try to fire Jay Powell, whether he might try to demote Michael Barr. There's all sorts of speculation out there about what the president may or may not do as it relates to the Fed.
Yeah, he might be a board member of the Fed.
Well, he said lots of things that are, let's just say, are untraditional. That's I think the polite way to put it. There have been a lot of people who have come on this broadcast and expressed deep concern about that. Do you express deep concern about that?
No, in a simple word. Let me explain. The Federal Reserve's independence is up to the Federal Reserve. The world central bankers, especially at the Fed, we shouldn't be pearl clutchers worried that someone's saying mean things about us.
Right.
We ought not have tender souls. What we should try to do is do our job, which means keeping prices stable.
No, I understand that.
Andrew, just for a moment, I would rather that the president and any elected official scream from the rooftops their views than in hushed tones in quiet meetings summon you to the Oval Office and try to push you in one direction.
I appreciate that, but
it doesn't bother me at all.
But the other issue is whether that there would be a challenge to actually remove either the current Fed president or others, whether that would be then challenged legally. If this goes to the Supreme Court, if you know the math of this Supreme Court, then people will say it's political because potentially that court case could get ruled in the favor of the president, which is something I think a lot of people think was not really the intent in terms of the true independence of the Fed.
So independent central bankers, we might think that their power comes from the printing press. The power of the Federal Reserve comes from its credibility. Its credibility comes from making the right calls, making the right decisions. The central bank's done a lot more harm to itself over the last several years, making the wrong calls, leading to inflation, which is deeply harmful for 52% of our fellow Americans who don't own any assets.
But if the idea is
that is more important to the Fed's credibility than whether these politicians are screaming or
You
not.
would favor that mandate over the other one, price stability, from what I hear. I think there should only be one.
Which is what Greenspan did.
Yeah, I would think there should only be one mandate, price stability.
So my own view is if you ensure stable prices, something that hasn't been accomplished for a long time, the central bank will do much of its job, and then we can have strong employment, we can have strong, robust economic growth. And so when you don't have stable prices, you're not going to hit any of these objectives.
If you wouldn't lower interest rates, does that mean you think this economy? I mean, Mark Rowan would argue that this is a great economy. Would you argue the same thing?
So I don't know what Mark Rowan said. I'll give you my view.
Okay.
The central bank beginning with the 2008 financial crisis, decided to get into this QE business and grew its balance sheet. When we did that, what did we say? We said we cut interest rates to zero. That wasn't enough in 08, so we created a balance sheet. And so what we try to do is get rid of the balance sheet, shrink the balance sheet first.
No, I understand
get
that,
out of that. But that's monetary policy. I know that the world central bankers have convinced you, Andrew, that in recent years, that's just about plumbing. That's about these other things.
All. I'm just trying
I actually think monetary policy now has a couple of instruments.
I'm just trying to ask what you think of this economy.
They ought not work at cross purposes.
I'm just asking whether you think this is a good economy.
I think the economy it has been.
How would you grade this economy?
I would grade the economy as having been goosed by $17 trillion of stock market wealth that came about starting last December when the central bank said, we've got lots of cuts coming. So with all of that massive liquidity, it is hard to judge how strong or weak the economy is because liquidity is everywhere. With respect to the broad conduct of policy, the Federal Reserve very recently cut interest rates, as Becky suggested, by 50 basis points. The strange thing is, when inflation was at 7, 8, and 9%, and they wanted to start to quash inflation, what did they do then? They waited 9 more months, and they raised rates by a quarter. So there's a strange asymmetry by how they act. My own view is they believe that financial market conditions are somehow restrictive, that policy is somehow restrictive. I'm looking around to find that restrictiveness, and I can't find it. So they've loosened policy so that it is less restrictive. But what happened to the bond market, Andrew? Since they did that, 10-year yields are up 60 basis points. The inflation compensation is probably 30 basis points of that. If they keep lowering interest rates with this kind of framework to loosen policy, turns out monetary policy might be quite restrictive at the end of this.
Kevin, want to thank you very much for being here with us today. We have lots and lots of questions. It's an honor to have you in here.
Thank you, Becky. Great to be with you.
We want you to remember who your friends are in the future if you were to have like a really big job and come back.
Honored to be here, Joe.
Coming up on Squawk Pod, with the race for the White House in almost dead heat, we speak with pollster and political strategist Frank Luntz on why he thinks the Harris campaign might be in trouble.
She is not connecting, and the people who like her love her, but she's not connecting to those persuadables.
Squawk Pod will be right back. You're listening to Squawk Pod. And yesterday, Vice President Kamala Harris held a town hall with CNN. And among other issues, she was challenged on her stance on the border.
Let's talk about this compromise bill that you want to pass if you're elected. You said that's going to be a priority. It includes $650 million in funding for the border wall. That's something Republicans wanted. That was part of the compromise. Under Donald Trump, you criticized the wall more than 50 times. You called it stupid, useless, and a medieval vanity project. Is a border wall stupid?
Well, let's talk about Donald Trump and that border wall. So remember, Donald Trump said Mexico would pay for it? Come on, they didn't.
That's where Andrew picks things up.
That was Vice President Harris speaking at a town hall event on CNN last evening. Joining us right now is pollster and political strategist Frank Luntz. We are now within the 2-week zone here as we get down to the wire. How close to the wire are we, and what do you think you know about these polls right now?
I think that clip illustrates exactly why Harris is in trouble at this point. And it's something that I don't understand why the campaign does not address. They asked her specifically, where do you stand on the wall? And what does she do? She goes and shifts it right to Donald Trump. Immediately mentions him twice within the first 5 seconds. She still hasn't closed the deal. She still hasn't said to people exactly what she would do. In fact, what she should have done in the opening of that town hall is said, I want to tell you what I'm going to do in the first hour, in the first day, and in the first week. And it's going to take me 5 minutes. So Anderson, you're going to have to sit tight. Here's what we're going to do by 1 p.m. She didn't do any of that. She hasn't told the public step by step what she's about.
Let me ask you this, and then I really do want to get back to the polls, though, because I think we're really now down to the wire, and everyone's trying to understand what the polls are really saying, not just on a popular basis, but when you look at this Electoral College.
Yes.
My one question, just to follow up on the CNN piece of it, is you don't like her answer. What is the right answer to that question?
The right answer is, as I was just saying, this is going to take me, and you go to the point.
No, but that's still not an answer to the question.
No,
so
but that's what she does. She doesn't answer the question. I think that's the.
But that's what I'm asking you. So my question to you is, Anderson asks her, what do you think of this medieval wall, or whatever it was the quote, and she's supposed to say what?
She's supposed to say, within the first 24 hours, I'm going to introduce legislation that supports the wall.
That supports the wall, okay.
And supports the DREAM Act for progressives who want people who came here through no fault of their own, and improves legal immigration so more people can come here the right way. It's such an easy compromise, and yet she doesn't say it.
Okay, let's talk about the Electoral College. Let's talk about these swing states that are either up for grabs or not at this point. There are some polls that would suggest that Trump is in such a lead that there's actually not voters left who are thinking about what to do. And then the question to you is, are there voters out there that you think are changeable?
And I now use the word persuadable. CNBC taught me that. I think it's the best way to communicate it. Those who are undecided are likely non-voters. If you're still undecided at this point, you're not going to participate. You're going to vote third party, or you're not going to vote. The persuadables, and it's a tiny percentage, it's about 2% now, because we've now made our decisions. They can be moved by Harris, not by Trump. And I find this fascinating, and I will acknowledge, I will say this on air, that I thought his debate performance was so awful that he could not win. And I'm now saying I was wrong, that the debate turned out not to be nearly as important, because what Donald Trump is saying is not as relevant to people's decision-making as what Harris is saying. So electorally, the states are different. You can't say they're all going to move one direction or another. I think Carville's wrong. What you do with voters of color determines North Carolina and Georgia. How you do with union voters determines Pennsylvania, Michigan, and Wisconsin, and Latinos.
And how accurate do you think the polls are, recognizing that back in 2016, Trump was undercounted, by the way, by oftentimes 8 and 9 percentage points, right?
And
then you go to 2020, it was down to, 4 or 5 percentage points. In 2024, are folks who are being asked who they're voting for either telling the truth? Is the system? Are they calling cell phones finally? How are we supposed to think about the numbers we see on the screen?
The issue for 2016 in particular was people not participating because they did not want to be counted. In 2020, it was less that and more about who they called or who they did online. A lot of my polling is done online. And in 2024, they tried to adjust for it. What we are sure about, is that the trend is towards Trump. And what I am sure about is that it is dangerous to call this election because it is dead even in these swing states.
Do you think there's anything to and this is from one side you're hearing this, that there's kind of a doom loop in that she needs to get out more because she's down, but when she does get out more, she just gets further down?
She is not connecting, and the people who like her love her. But she's not connecting to those persuadables because they want to know.
But what would you do if, October surprises, there may be an October surprise du jour. We've seen a couple already.
But we've been living through them.
Right.
Trump almost being assassinated, Biden dropping out. This stuff that's been happening right now, what's the Israeli-Palestinian conflict. We've had 3 October surprises.
Do you think that, if you were the Harris campaign, you'd tell them to do what immediately?
I would immediately do interviews on shows like this and have you guys go at her.
That might be
But your point is, you've got to be more than, I'm not Donald Trump, I'm not
Correct.
Joe Biden.
And
Here's
she
who I
could
am.
have disrupted, the town hall was live. So she could have said to Anderson, this is going to take a while, and just keep on detail after detail after detail to the point where Anderson goes crazy, and then she puts it out as a commercial. That's how you change
They're playing
things.
us to the commercial, so you can't take a while, but day after the election.
I'm afraid. I'm genuinely afraid that we're not going to have a decision the day after that, or the day after that. And this show, we warned people 4 years ago, pay attention to that warning, that we could have issues of credibility, of trust in this election.
And is it at a both sides situation?
It is now a both sides situation. I know the federal government is paying attention to this. I think that investors should pay attention. I think average Americans should, because this is not going to be decided.
Come on back, because we should talk about what that means as well.
It's like a recession. If you're expecting it, it doesn't happen. We could.
Well, let's
we
hope
could.
that's the
Yeah,
case.
let's hope that's what happens.
Yes, but
hope it's
because our
Y2K.
democracy is at stake right now.
That's the podcast for today. Thank you for tuning in. Remember, you can tune in every day if you follow Squawk Pod wherever you're listening now. Squawk Box is hosted by Joe Kernan, Becky Quick, and Andrew Ross Sorkin, weekday mornings on CNBC starting at 6 a.m. Eastern. We'll meet you right back here tomorrow. Have a great day.
We are clear. Thanks, guys.